Hi. Let's learn about financial instruments. Financial instruments are assets that can be traded, or they can also be seen as packages of capital that may be traded. Most types of financial instruments provide efficient flow and transfer of capital throughout the world's investors. These assets can be in the form of cash, a contractual right to deliver or receive cash, or another type of financial instrument, or evidence of one's ownership in some entity. Examples of financial instruments include stocks, exchange-traded funds, bonds, certificates of deposit, CDs, mutual funds, loans, and derivatives contracts, among others. Financial instruments can be real or virtual documents representing a legal agreement involving any kind of monetary value. Equity-based financial instruments represent ownership of an asset, while debt-based financial instruments represent a loan made by an investor to the owner of the asset. Foreign exchange instruments comprise a third, unique type of financial instrument. Financial instruments may be divided into two types: cash instruments and derivative instruments. Financial instruments may also be divided according to an asset class, which depends on whether they are debt-based or equity-based. Debt-based instruments are essentially loans made by an investor to the owner of the asset. Short-term debt-based financial instruments last for 1 year or less, while long-term debt-based financial instruments last for more than a year. Equity-based instruments represent ownership of an asset. Securities that trade under the banner of equity-based financial instruments are most often stocks, which can be either common stock or preferred shares. ETFs and mutual funds may also be equity-based instruments. Foreign exchange instruments include derivatives such as forwards, futures, and options on currency pairs, as well as contracts for difference, CFDs. Currency swaps are another common form of forex instrument. In addition, forex traders may engage in spot transactions for the immediate conversion of one currency into another. Financial instruments come in many forms and types. What makes them financial instruments is that they confer a financial obligation or right to the holder. Common examples of financial instruments include stocks, exchange-traded funds, mutual funds, and others. A financial instrument is effectively a monetary contract that confers a right or claim against some counterparty in the form of a payment, equity ownership or dividends, debt, currency, or derivatives. Depending on their type, financial instruments may be exchangeable on listed or OTC markets. Here are 4 key takeaways. 1. A financial instrument is a real or virtual document representing a legal agreement involving any kind of monetary value. 2. Financial instruments may be divided into two types: cash instruments and derivative instruments. 3. Financial instruments may also be divided according to an asset class, which depends on whether they are debt-based or equity-based. 4. Foreign exchange instruments comprise a third, unique type of financial instrument. Hope this would help. Thanks for watching.